So the market has been bananas over the past year. Today, we dive deep into my personal investing strategy to take advantage of all of this volatility and the places that I'm looking to put my money into. Hey everyone, it's Ethan back with another video. I'm trying to focus this channel with content about what I'm passionate about. Trying to turn money into more money is certainly one of them, and with the current market conditions, man, there's a ton of opportunity to be had these days between the stock market and alternative methods of investing. I'm obviously not a financial expert, and everything I say is purely my opinion, a speculation, and certainly not investment advice. There's no need to explain how crazy everything has been recently, but with the inflection of all this unemployment and stimulus money and another 1.9 trillion coming soon, just like the previous stimulus packages, this is going to have some major short and long-term effects on the market. Short term, all the people who aren't actually in need of the $1,400 will just invest it back into the market, crypto, or other investment opportunities. I think we'll see another bump in the market because of this. And in the short term, we've continually seen the government prove that they'll do pretty much anything they can to prevent another economic crash. So there's a higher floor in the overall market levels, and it even seems so even with all this volatility. But because we've seen some incredible gains from the overall market and individual companies in 2020, I don't envision the same type of high highs in the long run. This is pure speculation, but because of how high some of these companies' valuations are now, especially in the fintech space, I think it'll affect how other markets and industries will grow long term. Typically, we hear the average rate of return of the S&P 500 to be around 10% per year. In 2020, the S&P closed out the year at a record high and net gain of over 16% after a massive sell-off in February and March as well. And even more incredible, 6 of those individual stocks in the index fund had close to 100% or higher gains in the year, with of course Tesla leading the charge at plus 740%. Although I do see the long-term expected gains to be more flattened out after a ridiculous year with extremely high gains, that doesn't mean there aren't amazing opportunities to take advantage of right now. My overall investing strategy is pretty simple. Buy and diamond hand everything until I'm old. I've talked about a few speculative stocks on this channel in the past, but a significant majority of my portfolio is simply filled with long-term holds. I've been lucky to purchase a lot of my equities during the rock bottom prices of March or April 2020, but from that experience, I learned the valuable lesson of continually buying the dip by dollar cost averaging, not panicking to sell, and to hold on for dear life even if the market drops a bunch. In the past few weeks, we've had a lot of energy and tech stocks plummet almost 30% in just a few days, like Tesla falling to the 500s. And as painful as it is to see some really dark and red numbers, it's actually the best thing to happen, as I was able to continually dollar cost average and buy more. I might sound like a psychopath, but my mentality with the stock market is that I love red days more than green days, simply because I see all of my stocks as long-term holds anyways, so I never really intend on selling. Red days and dips just allow me to add more onto my position at a discounted price. Probably one of the most important things is to purchase at a rate that allows you to dollar cost average versus buying a lump sum at once. It gives you the leverage to buy back into a lower price if available, and you're not totally screwed if the markets do go down. I will admit, I'm certainly more on the aggressive side of this philosophy, as because of the recent dip in the markets, I've dipped a little bit of margin myself, a little influenced by another finance YouTuber called Meet Kevin, who has a significant chunk in margin. I personally only have about $2,000 in margin on Robinhood, whom offer 2.5% interest. And honestly, it seems like free money given the number of deals that's occurred so far. So here are a few of the highlighted stocks that I bought into that seem to be at a discount recently. Of course, first you have Tesla. I dollar cost averaged that all the way down from the initial dip to the low 500s. Next, you got Redfin at under $70. You got Etsy under $190. Amazon I love under 3,000s. Palantir in the low 20s. Churchill Capital CCIV, I love them in the low 20s as well since they dipped. Next, you have ticker symbol NERD. That's a gaming ETF. I really love that space, and I think that it's gonna grow really rapidly, so took advantage of that dip. Then you have Planet 13. They're an extremely hot cannabis stock that was hit hard recently. And of course, you've got Penn under $100 that I keep buying into, and I sprinkled in some Bitcoin and Ethereum while they dipped in the meantime as well. But crypto, that can be for another video, but rapid fire through. Those are some of the stocks that I bought into recently. So those are a few of my recent purchases. As you can tell, I'm literally all over the place, but I'm just trying to take advantage of the recent dips and discounts across the board. Long story short, I'm personally buying with a long-term perspective and dollar cost averaging my way down if another volatile crash comes. Red days are good days if you never plan to sell. Anyways, thanks so much for watching this video. Let me know what stocks you're really bullish about in the comments below. Would love to learn more about different stocks that are going on. Leave a like if you made it this far, and if you want to watch more financial or stock content, let me know. See you next Tuesday.